Nilesh Shah of Kotak Mahindra AMC is here with us in the newsroom. Nilesh, thank you so much for being here. It's such a, it's such an interesting time, right? Interesting week for the market. With even the kitchen sink thrown at the market, this market is back, and how? I mean, that just speaks about the kind of support that we're getting from the domestic institutions.
Nilesh Bhai once told me at an event, he said, "Looks, it seems like God is an Indian, right?" Whatever you throw at this market,
it just bounces back. Yeah.
Something is there for Fridays. I don't know what's happening every Friday. The way markets come back and pull back is how, we probably just be in a sideways or a negative market for the entire week till Thursday, and all of a sudden Friday, it's just like, from nowhere today's rally came, right? I mean, 400 points on the Nifty, and we've just recovered all the losses what we saw throughout.
God is Indian. He doesn't want to spoil your weekend.
and he particularly likes Friday. So, I think, but let me just take two minutes to outline what has happened, because we've had a really, I think we will remember this sort of 2 weeks, the last 2 weeks, because they've been really, I don't use the word seminal lightly, but really something for global macro markets in that sense, right? We've had walls, for example, went to, they were crisis grade, back to 2000, 2008, 2020 level walls in many markets, and all of that has cooled off and come back to, it's almost as if nothing happened. If you went to sleep, on the 31st of July and sort of woke up now, you'd say, well, we're right there. Nice Goldilocks kind of situation, not too hot, not too cold, waiting for central banks to ease. But in between, you had a bit of a mini heart attack, which has happened. I'll not go through what happened back then. I'll just outline the bounce that we've had from the recent lows. The markets was the 5th of August, and just some numbers will give you the idea. First of all, Nasdaq's recovery over the last couple of days basically now means that it's actually flat on the month now. I mean, it's not down 4%, 5%. At one point, it was down 9%. It's not. It's flat on the month. So that's the kind of recovery we've seen. S&P 500 has added about $4 trillion in market capitalization from the low on the 5th of August. I mean, you're throwing around trillions of dollars. And there was an FT article which said, well, why is the Japanese market trading like a penny stock? But this is the S&P 500, and it's added $4 trillion from the lows. NVIDIA, one stock, added $700 billion in market cap from the lows on the 5th of August. I was looking at a particular the semiconductor space is the real leader in the US. And an ETF which tracks it closely, it's widely followed, is up 18% from that low on the 5th of August. The CBOE Wix, the wall, I mean, that's basically back to pre-jobs data, back to 15 levels. The high was 65. So, I mean, the question really is, do we go back to that same kind of looking up? Maybe the pace varies depending on who you ask, but the trajectory is up, and we've kind of put all this worry behind us. Also, Sonia, I was looking at the NSE 500 group of stocks from the 31st of July till now, because the high for that index was the 31st of July, and it's a broad-based index. I could only find 60 stocks out of 500 which are down more than 10%. Still, as of today's close.
So the big question is, why is the market sort of ignoring all the negative news flow, right? And just bouncing back. Nilesh, you want to comment on that? I mean, it's been a phenomenal market, so resilient, bouncing back in every bad news, and now where we're at, right? Once again above 24,000. But do you think that there is some sort of a time-wise correction coming, or not quite?
So answer is yes and no. Yes, because there is liquidity, very strong, and there is more money waiting to invest on correction. Market is never kind to such money. It goes up, sucks everything, and then only gives the correction. Two, this money is coming with confidence. There was a question asked in one of the meetings where someone said, why are you launching funds? Isn't this expensive market? And I said, do you want to short the market for next 5 years? If yes, then I will not launch the fund. That guy kept quiet. So money is coming with confidence. They are optimistic about future. And third, between this combination of fundamentals and liquidity, competitors are scoring self-coal. You can't go to China because of Taiwan issue and real estate worries and slowdown. Russia is right off. Brazil with communist government is gone. So effectively, we are also getting, no other competitor. Now you put three things together, no doubt market is rising.
And the market is doing what it is doing without foreign inflows, right? I mean, so far at least.
Now imagine if they have to come and buy, what will happen?
I mean, it's just... But do you think the flows story will continue? 30, 40,000 crores now is coming into this market every month.
Prashant bhai, between FY21 to FY23, when markets delivered like 100% combined return, more money went into currency notes, double than what comes to mutual fund. So I have to just convince the person on the street कि भैया पैसा घर पे मत रखो, mutual fund में डालिए. That will ensure that my flows will double from what level I am getting. How difficult it will be for me to convince an average guy that घर में रह के currency note double नहीं होगी. It's very difficult, I believe, but I will keep trying.
I think people have understood, right? I mean, they look at the SIP data on a month-on-month, it's only going up. The domestic equity is so strong. Even X of SIP is a very strong equity cult now. Everybody, I mean, the remotes of areas is where, you know, you're getting infused into the equity market. So, but you know, the other point is so much of cash is sitting on the sidelines. Mutual funds are sitting on cash. The larger HNIs and, you know, the family offices are sitting on cash as well. So point taken that, you know, you can't say a very sharp correction, but from a valuation point of view, where do you stand right now? I mean, are you getting a comfort that you can deploy more money into, say, defense or those kind of sectors?
So we'll have to be very selective. In a lighter vein, this is Amar Akbar Anthony Market.
Yes.
I was waiting for that, Nilesh. God is an Indian, I loved it. But Amar Akbar Anthony on a Friday evening, go for it.
यहाँ पे अनहोनी दिख रही है with the kind of rally. And there are stocks like Amar Bhai, upright police officer, good fundamentals, good valuation. You stick to them, you will make money.
The naughty.
Of course, there are also stocks like Anthony Bhai, where fundamentals are good, but valuations are too expensive. Now, Anthony Bhai has to become like Amar Bhai, which he happened in the film, and then you will make money on them.
So I have a question. Do you come up with these on your own, or do you have some research team to help you with these nuggets?
No, this is all on my own.
Nilesh bhai is all in his own. He will always give us some of the other headlines. So he's now got that punch of giving headlines to media. So we really like that.
Okay, but you know, let's also focus on what happened this week, right? Mining stocks were in focus after the industry faced a major setback. The Supreme Court verdict allowing state governments to levy additional royalty retrospectively and prospectively is expected to impact many mining companies. Nigel, you've listed down the implications on various mining companies. Take it away.
Well, that's right. The Supreme Court verdict actually was a blow for the mining companies. And mining companies, yes, they were down, but they didn't get knocked out. You know, and that was something that was encouraging, because what the Supreme Court said, that the state governments, via royalty, via taxes, they can go ahead and levy taxes both retrospectively as well as on a prospective basis. So initially, people were very, very nervous because of the retrospective part of it. And if it was on the retrospective part of it, and if it had to be paid immediately, it would be a large proportion. If you look at the contingent liability as a percentage of the EBITDA for FY24, well, it would be very, very large. But the Supreme Court's verdict gave some hope, because there were a couple of clauses that they put in. They said that the payments can be staggered over the next 12 years. They also said that the states will not impose penalties or tax for past demands, which was encouraging. So because of this 12-year clause, well, the impact didn't look that much. For Tata Steel, they already made a contingent liability of around 17,350 crores. Now they'll be paying that over the next 12 years or so. And we have Phillip Capital that's put in a number very, very marginal in comparison to what their target price was. Similar is the case with SAIL. You know, they had marked a contingent liability of around 3,000. Very limited on the target price. NMDC as well, they had put out a contingent liability of around 4,400 crores, but it could be passed through as well, and it will have to be paid over the next few years. So some part of that will be pushed through to its clients. In all, you know, this number, though they were looking big initially, but in fact, you know, if they're going to be given time, then it doesn't look very, very big. And similar is the case with regard to Nalco. So all these numbers that came out post it appeared big, but because that concession was given off around 12 years odd, the impact is not that much. On a prospective basis, what about it? Well, we already had Jharkhand post the Supreme Court verdict in July itself. They went ahead and they tinkered with the rates. They increased the rates on coal and iron ore, on bauxite as well as manganese ore. And now the state believes that the other states as well, you know, Maharashtra and other states, they will follow the way. Don't increase taxes by that much, because otherwise, you know, it doesn't become very, very viable for those companies. So that's why Phillip Capital, they've quantified it. They say that at most, you know, most of these companies will have to incur only 1 to around 3% of the total cost of production. For steel companies, it could be a little bit higher hit, 400 to around 500 rupees approximately. But for aluminium companies, it won't be that large. All in all, it appears that yes, This Supreme Court verdict that came in on the mining companies, it was a knock at them, but it wasn't a knockout. So that's why the street did buy into that news, in fact, in Friday's trading session. Nilesh, can we get your comment on this particular case? You know, everyone was dreading it, but it seems now that, in fact, the outcome isn't that bad because these taxes will be levied retrospectively, but they've given them timing. And also, Jharkhand government, they have shown the way. They've increased it by marginally, 50 to around 100, 200 rupees, easily digestible. Your take?
So, Nigel, you have explained very well with numbers. When you go and change laws retrospectively, and you expect corporate sector to pay for it, that doesn't reflect good on the governance side. We have seen when Vodafone's retrospective tax amendment came, it did impact our valuation, our reputation in the market.
Indeed.
We are now fifth largest economy. We should be behaving like a fifth largest economy. This kind of retrospective changes are more meant for, let's say, emerging markets. We are still emerging market, but fifth largest economy, this doesn't look good.
You know, Nilesh, actually, I was going to ask you that as a second question. First, I wanted to ask you what do you think about the impact, but you've answered it because, you know, I was thinking it reminded you of the 2011, 2012 days, you know, when we had these retrospective taxes, put the industry into a bit of a tizzy, a couple of sectors get hit. So let's hope that, you know, better sense prevails. And as of now, you know, most of these states at the center as well as the state, you have the similar government. Nothing on a prospective basis that will hurt the industry as well.
The only good thing, Orissa is the only state in India which has revenue surplus.
Yeah.
With this, I just hope and pray that states uses them sensibly,
Yes.
like Orissa has been using it.
Correct, correct. Okay, so, you know, that is, of course, the one big headline of the week. The other big headline was a new listing, right? Ola. And it's been perplexing for everyone, the way Ola has rallied. But I just wanted your thoughts on that. How does one approach it? Because the company is still loss-making. Yes, there is EV adoption happening. Yes, it's a... But what do you do from here?
So essentially, Ola is a leap of faith.
Yeah.
You are taking a call on entrepreneur. Will he be able to deliver a product with supply chain management, which will eventually make money for you? There are a couple of leap of faith required. Is EV the future? Today there are question marks on that. There is CNG motorbike. Fossil fuel can continue to work for a while. The second is the management. Will we have enough material? Will we depend upon China? Will there be consequences for the same? So when you are investing in this kind of sector or a company, you are assessing on the promoter that yes, he'll be able to surmount all the challenges.
Okay, well, you never know. I mean, it has come as stock has moved. So now let's see from here on. But yes, all eyes will be on the new motorbike. It's time for a short break on Editor's Roundtable. We continue the discussion on the other side, so stay with us. Welcome back to Editor's Roundtable on CNBC-TV18. Now, there was lots that took place this week. One thing that stood out and what we're going to talk about is PSU earnings. There have been some hits. There have been some misses this quarter. FY25, in fact, has started on a stronger note, but we've seen big rallies as well in stocks. So, Nilesh, you have some details for us?
In fact, FY25 has not started on a strong footing. In fact, the hits and the misses were more in favor of misses than in terms of hits. I was looking at the Motilal report today, and they said, for FY25, there are only 64 companies where there's been an earnings upgrade of more than 3%. On the other side, there are more than 108 companies where there's been an earning downgrades of more than 3%. So, in that sense, it was not so great. I just want to see, it's been a mixed bag for the PSUs. I'm largely saying this because there has been so much of retail interest. I thought I'll just put some data in terms of how the PSUs have done in quarter one. First, the big misses of quarter one in terms of the PSU basket. Midani was a big in this quarter. The EBITDA margins are down 700 kind of miss we've seen there. All the three OMCs have also seen a big miss in terms of EBITDA. But here I'll put it the LPG subsidy, which might get reversed in the second half of this year. So not much to read into that. But RVNL, Bharat Dynamics, Reltel, BML, all have seen a bit of a mixed bag in terms of earnings. Only Reltel was a bit of an outlier as far as the EBITDA margins are concerned. Having said that, there were some outperformers as well. Cochin Shipyard was a classic example. The EBITDA margins are up 600 basis points. So was the case with Mazgaon Dock as well in this quarter. So was HAL Hindustan Aeronautics. It was not a big disappointment. It was slightly positive as well. But if you look at this kind of PSU stocks, on an average, where the misses have been quite higher, all the stocks have shaved off between 15 to 25% from the recent peaks. But if you look at the valuation picture, it's still very, very expensive. Look at Bharat Dynamics. It's still trading at almost 40 times, 30 odd times. Now, whereas the average has been just 14, 15 times. So is Garden Reach. It's still quoting at around 31 times versus the average of 17 times. So it's been a mixed bag, in the PSU basket. But Nilesh, you've been saying about the Amar Akbar Anthony, the Anthonic part of the market. We have seen so many disasters in quarter one. Is this a bit of an eye opener for retail investors that watch out for earnings, and now they're clearly seeing cracks in many companies now?
Undoubtedly. There are many PSUs where turnover is almost flat over 5-year period. Probably gone up, and stock prices have gone up
5x,
like a 6 hit from Rohit Sharma's bet.
Yes.
For a while, it looks like it will defy gravity and go to the sky, but finally, law of gravity applies and ball does come down. Sure. So same thing will apply to this PSU stock.
The PSUs, but I've seen a couple of even the private sector defense companies like Bharat Dynamics, MTA Technologies have reported very, very poor numbers in quarter one. Maybe there is a bit of seasonality as well. But the fact that they've rallied so, is this a bit of a warning sign that one need to be very careful? And in that context, the fact that so many mutual funds are launching new NFOs in the defense sector is a bit of a worry?
So mutual funds probably are launching this scheme in horizon. Second, you'll have to also adjust return expectation. If you are having more with long-term time horizon, then yes, this might be the fund for you. I think last year's performance in next 1 year, yes. I mean, clearly stay out of it. The Ukraine war is showing us that $1 million drone. Now, if your companies are investing in futuristic defense, but if you're dinosaur making tanks, then probably there's no future. Second, you should have capacity to make and export. Yeah. If you are fully booked, I mean, there are certain companies where they are booked for next 9-10 years. Yeah. I mean, how will they grow? And finally, your market can't be just domestic. You have to go to export market, because our defense budgets are not going to grow in very high digits. It will be either high single digit or low double digit. And on top of it, there are certain things which we will have to import despite localization. So the budget available for domestic market will be fairly less, and hence go for companies which are futuristic, which are into exports and which have capacity.
Just points I wanted to address. One is politics, because given the fact that we are Teflon coated, bulletproof, and flows overcome everything. Elections are around the Jharkhand, Haryana, Maharashtra, J&K. Do you think in a difference to the market? How closely will it be watching politics this time?
So, real impact onto the market unless until something dramatic happens. And my feeling is that as of today, market is pricing in a 5-year term for the current government, despite being a coalition government. We have seen in the past coalition government continuing to run the economy and country reasonably of government and governance. If the state election results indicate otherwise, I don't think there could be some reaction from the market. But generally, state elections don't necessarily change the market's trend.
Okay, well, there's no point living in the future and worrying about this. We might as well just enjoy the present and
Enjoy the weekend.
It's a long weekend for some, not for us. But in any case, weekend coming up. Thank you so much, Nilesh, for being
Thank
here
you.
and taking the time out. As always, with that, it is a wrap on this edition of Editors Roundtable. More news and updates continue on the other side.